Bitcoin is running into some selling pressure after a top Federal Reserve official said there is no compelling case to halt the liquidity tightening. Joining us to discuss is CoinRoutes CEO and co-founder Dave Weisberger. Hi, Dave. Before we get into the Fed stuff, let's talk about America's favorite topic, the debt ceiling, for a moment, just because I'm curious about, and obviously I'm being sarcastic there, it's like my least favorite topic, but let's just talk a little bit about its relationship to Bitcoin, which is a little bit confusing, like most things relationships to Bitcoin, because, when it looked like there was sort of resolution on the debt ceiling, Bitcoin had this like brief surge and now it's down. And I guess my simple question for you is there any debt ceiling Bitcoin narrative at all, or are these just two kind of totally separate things? Because the narrative is very unclear. Like at first it looked like it mattered, and then now it's going down. So I'm just curious, like how you connect these two, if there's a connection at all.
Well, I think there's a meta question and there's a micro question. So the meta question is there a narrative? The answer is yes. Bitcoin at its core is an investment in distrust of institutions. As your previous guest, Congressman Davidson, articulated quite well, effectively private money that is sound money is very different than what's going on in the current fiat world, which is backed basically by nothing. And the kabuki theater of the debt ceiling provides a great backdrop for it. As my friend Scott Melker says, we're 79 for 79 when this bill passes, where the debt ceiling just continues to go up and up and up. Effectively, the only thing the debt ceiling bill does is it does force administrations to talk to Congress at least and have some element of negotiation. It's not like it's the greatest result, but it does provide some braking on runaway fiscal spending. So Bitcoin is a vote against that, if you will. So the entire notion is a big deal. But in the micro sense, I think that Noel Atchison in the Crypto is Macro newsletter said it really well, which is when the markets were open when every other market other than Bitcoin, Ether, and crypto were open on the weekend, there was no place else for people to speculate on, oh, good, we're going to get a debt ceiling resolution. We're not going to get a default. And so the relief rally went too far. And so when markets opened up on Monday and people really started thinking about it, it's like, well, is it really that big of a deal? Should it really have mattered? And the answer is not really. And so we're kind of gently settling back down toward that same level of support that we were at.
So what happens if a deadline is not reached? What will be the impact if the deadline is not met? What would be the impact on the crypto market?
Well, it seems highly unlikely that will happen now. I mean, you just heard Congressman Davidson's going to vote for it. Obviously, the administration is going to get their people to vote for it because they don't want to see a catastrophe. The truth is they're playing it really close to the line this time. So there could be issues of, had they not come to a resolution, that there are two tail risks that could have happened. Either the administration could have done something silly, such as eschew checks and balances altogether and mint the platinum coin, or they could have allowed defaults to happen, forced government shutdowns, potentially impacting credit rating of the U.S., which would increase credit borrowing costs even more. And that would have been bad. I mean, I think that, Secretary Yellen's 45% fall in markets and global depression was a bit overstated. But the reality of the situation is it wouldn't have been good. And that's what forced them to the negotiating table ultimately.
I want to talk about something that you said that Bitcoin and Ethereum are holding over 27K and 1900 respectively, and it feels like more of the bottom of a trading range than a short-term top. Can you just explain what that means for us?
Yeah, I mean, if you look at all of the various factors going on, and I'll focus on Bitcoin, Ethereum, maybe the range is a little bit lower, but, whatever, whether it's 1900 or 1800. But if you look at Bitcoin, effectively what you've seen is a very obvious result of long-term holders increasingly, and it seems like every month we get a new all-time high in percentage of long-term holders. You also are seeing the hash rate in the Bitcoin network at an all-time high. Last month, there was a panic that caused Bitcoin to drop below the trading range, which is more or less somewhere in the 27 to, very low 30s range that we poked back into post FTX and were at last summer before, the multiple cataclysms of forced selling when lenders defaulted. But basically, you're seeing the hash rate at an all-time high. And last month, we had a freak out because of the ordinals issue and transaction costs started, really spiked. But those are starting to normalize now, and the network is starting to absorb the effect, which is what free markets do. When demand goes up in a spike, prices go up, sure, and then things normalize. That's why the hash rate's increasing. So the fact is the Bitcoin network is alive and well. At the same time, holders are at an all-time high. At the same time, Bitcoin on exchanges to be sold is pretty close to a low. Volumes on exchanges are also bumping along the low side, which tells you that speculators are kind of, moving into pricing and moving out, but the long-term buyers seem pretty happy to buy in this 20 below 27 range and cushion any downdraft. So it feels like we're in the bottom of trading range to me.
Dave, thank you very much for joining us this morning. That was CoinRoutes CEO and co-founder Dave Weisberger.